It's a great privilege to be with you and a great honor to introduce today our two panelists, our two speakers for this webinar. We have Ulrich Bindseil from the ECB and Morten Bech from the BIS Innovation Hub. Ulrich is the Director General, Market Infrastructures and Payments, and Morten is the Center Head, Switzerland BIS Innovation Hub. And for obvious reasons, these are the two speakers that we would like to have around today. Without going into details about their long CVs and their various connections to the question at hand today, let me just recall that on the one hand, among many other things, Morten brought us the famous money flower that we're all using in our presentations and discussions of the subject. And Ulrich has just recently released a very interesting working paper in which he sort of makes it clear, I guess, that the ECB is seriously thinking about these questions and laying out different ways how a central bank could try to manage money demand for CBDC if it were ever issued. We have listed a couple of topics and questions on the website that we would like to address today. I would suggest that we get started with each of those speakers to take a few minutes and give us maybe a general overview, maybe a short presentation on the topic, how they see it. And then we would start from there and dig a little bit deeper and try to address the different issues that we have listed on the website. Morten, please, the floor is yours for the next 10 minutes, please.
Thanks for having me. It's a great pleasure. I should say that the views in these presentations are mine and almost surely do not reflect those of the BIS. Yesterday, the BIS Innovation Hub, together with the SNB and SIX, published a report on CBDC. So it was called Project Helevetia, Settling Tokenized Assets Using Central Bank Money. So what is CBDC all about? This is actually my only joke about CBDC, and it only has a very limited shelf life left. So CBDC is really all about making M0 great again. What kind of CBDC or central bank money are we talking about when we're talking about Helevetia? We're talking about reserve balances and also wholesale CBDC. So it's the other form of CBDC. I think Ulrich is going to talk us through retail CBDC. When you think about settlement, you usually have a asset leg and a cash leg. And so the asset leg can either be traditional assets, such as we know them today, and then they are typically settled against central bank money in the form of reserve balances. So that's today's arrangement, securities in traditional centralized securities depositors, and then the reserve balances are then held and moved in the RTGS system of the central bank. So what we look at in Helevetia is that we actually have tokenized assets, so that those are assets that exist on a platform that is based on DLT, and then we try and settle the cash leg either through a link to the RTGS system or by the central bank actually issuing a wholesale CBDC, so a tokenized form of money on this DLT platform. So those are the two POCs that we considered in Project Helevetia. Where did the tokenized assets all of a sudden come from? And here in Switzerland, SIX, which is the financial market infrastructure in Switzerland, has built this new Swiss digital exchange, which is a trading platform and also a DLT CSD that from sometime in the first half of next year will be able to issue, list, and trade and settle and also service and hold tokenized assets. It kind of mirrors all the things that today's infrastructure that is built by SIX provides. So issuing, listing, trading, clearing, and settlement, and also asset servicing and custody. And then what we focus on in Helevetia is really how do you handle the cash leg. And so this is just a very simple topology of the SDX platform. And as you can see that two things are I think interesting. One is that it's a permission platform, so only banks will allow to participate. And also the consensus on the DLT platform is done by a so-called notary node. And then this is connected up with a new trading system that is part of this SDX infrastructure. This is the DLT platform that we use in the POCs. It's not live yet, so it was you can call it the test environment. So just a quick overview of the Go Live solution and also the two POCs, and again focusing on the cash leg. So when SDX go live, it will settle the cash leg in using a privately issued stable coin backed by reserves held at the SNB. So this will be a liability on SDX and not SNB. So that's very important. In the first POC, we actually had SNB issue a tokenized wholesale CBDC onto the SDX platform. And in the other POC, we created a link between the SDX platform and the SIC, which is the Swiss RTGS system. And so this is just to show you how POC 1 worked. There were basically 4 use cases that we did. We did issuance of wholesale CBDC, we did redemption of wholesale CBDC, and then use case 3 was basically what we know as delivery versus payment. So that means that the security token only moves if and only if the cash token moves at the same time or conditional on each other. And we also tested whether it was possible just to transfer the wholesale CBDC from bank 1 to bank 2. So that is use case 4. So that is just a regular payment on this platform. And then it was also possible, of course, for the banks to redeem their wholesale CBDC. So that is use case number 2. In POC 2, where we settle against the RTGS balances or SIG balances, there was really only one use case where we tested whether it was possible to do delivery versus payment across the 2 platforms. And no surprise, indeed it was, and we'll get back to that. So one thing just to highlight is that if you issue a wholesale CBDC, the central bank's balance sheet might look different. And what is interesting in this particular case is that the wholesale CBDC can actually exist overnight. In other experimentation by central banks, there's been so-called depository receipts that only existed intraday, and then the DLT platform could use these to settle during the day, but at the end of the day, they were brought back to the central bank balance sheet. But in this case, we would actually have a new component of M0 because the wholesale CBDC could, in principle, exist overnight on the DLT platform. So if we compare the pros and cons of the 2 POCs, POC 1, so using a wholesale CBDC, that actually enables the full functionality of the SDX DLT platform. You can do more in terms of execution of programmable business logic known as smart contracts. And it was also possible to do what we know as atomic multilateral settlement. One of the things that, the cons of issuing a wholesale CBDC is just that it raises a number of legal and policy questions, and actually also requires substantive adjustment to the central bank's business processes. On the other hand, an RTGS link does not raise any material new legal or policy questions for the central bank, as the central bank money already exists and remains in the RTGS system. So it only requires a minor adjustment. But of course, the functionality, unless you do major changes to the RTGS system, is a bit more limited. So those are kind of like the trade-off that a central bank will need to consider if it wants to go down this path. So what is new, both in Project Helevetia, but also it's in particular relative to some of the other central bank experiments that have been conducted around the world? First, I think we make it very clear that central banks have options in how to integrate with future or new or coming DLT platforms. They can either do it via wholesale CBDC or via the RTGS system. I think very importantly, the POC ran in a live or near live environment. So the technical environment were the near live test environment of SDX and the test environment of the Swiss RTGS system. And also we did quite a bit of study on the legal setup, and we were able to achieve what is known as finality, both under the current Swiss law, but also its new DLT or blockchain law or legal regime. And as I said, wholesale CBDC brings more functionality, but is also more challenging and actually provides a couple of deep policy considerations for the central bank. And then, as I mentioned, it can become a new component of M0, but that's probably more what we can call inside baseball. Finally, readability of the report. Why should you read this report? One of my colleagues did this very interesting study, which basically just shows using some measures that this particular report is relatively easy to read compared to other reports. So maybe that's a reason why to pick this one up. But if you, as many, cannot be bothered to read a report, we actually also produced a number of videos, and I believe that we are able to show one of them to you now.
The Swiss National Bank, the Bank for International Settlements Innovation Hub, and SIX have joined forces as part of Project Helevetia to investigate how central bank money could be integrated into a distributed ledger technology-based financial market infrastructure. The project consists of two proof of concepts. Both test the functional feasibility of settling tokenized assets, which are traded and settled on the SIX digital exchange in central bank money. In proof of concept number 1, the cash leg of the transaction is settled with a wholesale central bank digital currency, wholesale CBDC, issued directly onto the DLT infrastructure of SDX by the Swiss National Bank. As part of proof of concept number 1, 4 use cases were investigated: issuance or tokenization of wholesale CBDC, redemption or detokenization of wholesale CBDC, delivery versus payment settlement of tokenized assets against wholesale CBDC, and transfer of wholesale CBDC or wholesale CBDC payment. In proof of concept number 2, interoperability between the DLT infrastructure of SDX and the Swiss RTGS system SIC is established, and the cash leg of the transaction is settled in SIC balances. As part of proof of concept number 2, 1 use case was investigated: delivery versus payment settlement of tokenized assets against SIC balances.
Thank you very much, Morten, for this first impression on your work around wholesale CBDC. Before we go over to Ulrich, maybe there's a question in the chat. In Helevetia, is not the DLT a Corda platform? Corda established consensus validity by the signers of the transaction. The notary only monitors if there has been double spending, in parentheses, uniqueness.
That's actually absolutely correct. I misspoke, so to speak. It's not the consensus. It's really just what it does is that it exactly ensures that there are no double spending.
Thanks. And then there's a question by Roman Bischoff. The proof of concept approach RTGS Link is a kind of synthetic CBDC. Is that correct?
No, I wouldn't look at it that way. I think it's just another way of settling in central bank money. There's nothing synthetic about the central bank money. It is a digital form of central bank money, but it's not what we usually relate to CBDC, because we think of CBDC as not as reserve balances, but in when there's the link to the RTGS system, you are settling in central bank money, you're settling in reserve balances. So I don't think there's anything synthetic about that.
How is the token stored on the ledger? And then there is another question that asks, did you experience any challenges in linking the payment system to the DLT platform?
Let me just say, it's very clear that the POCs have no bearing on whether the Swiss National Bank is going to issue a wholesale CBDC or not. That decision has definitely not been taken in any shape or form. Also, this has no bearing on retail CBDC in Switzerland. I think it's too, given the time, I think, how it works, it's absolutely right that somebody already noted it. The DLT platform is built on Corda by R3, so that's how the distributed ledger works.
Morten, thanks for now on these answers. Let's move to Ulrich. And Ulrich, I think, is focusing more on the retail CBDC side, which some of the other questions will then probably connect to, and we'll get back to those. Ulrich, do you want to give us your opening perspective on the issue, please? Thank you.
Absolutely. Thank you, Dirk. So I will, repeat a few things. We have published this digital euro report, and then I will add a few considerations that are my own consideration and which relate also to topics we may discuss later. So, this report, that's part one, really came out 2nd of October. It's about a retail CBDC, so available to all and digital. And you could say it's a digital equivalent of banknotes. Really, it would, however, complement and not replace cash. That's a clear statement in the report. And it would, it uses the word costless, provide costless access for citizens' basic payments in a simple, risk-free and trusted digital means of payment. So, and then the report, describes the scenarios. The report says currently we don't need this, but there are scenarios where we, would, or where society would benefit from it, to put it generally. And the scenarios mentioned, or one, I'm not sure it's a scenario, but it says basically, there's something called digitalization going on of the society and the economy. And central bank money accessible to all should naturally also be digitalized now to preserve its contribution to society, because that digitalization allows for a lot of new functions. And why would the main central bank product available for all, just not follow here the technological process? And then, relating, of course, but more concrete, the usage of cash is declining. The trend may continue even if the official sector supports cash usability. So both the ECB just on 2nd of December, 2 days ago, and also the Commission in its retail payment strategy are committed to cash, and not only, ECB to cash issuance, but also to support, to the extent possible, the usability of cash. But who knows, if people don't want to use cash, then you cannot force them eventually. And therefore, you could just be out of the business and society could not benefit any longer from easily usable fallback solution relative to privately offered means of payment. Last but not least, payments is a network industry. So you have a general issue of market power easily emerging. And in this context, again, a fallback solution in the form of a publicly offered means of payment is valuable. And in addition, maybe in Europe, we have seen the issue that the European providers of payment solutions have seen their market share shrink over the years. I mean, that's an outcome of competition. So per se, that's of course fine, But at some stage, there could be a European monetary sovereignty issue, as the payments is a very crucial function, of course, of society. And you don't want to be fully dependent on foreign companies, which might to have accept, let's say, orders from their home governments. Okay, so those are a bit the scenarios mentioned in the report. Then one important point, and there we enter things we should also discuss later, is it's a complement to private initiatives. It should not crowd out private initiative. And a few points one can mention here that, payments is a very big market. It's digital payments is a growing market. So the coexistence of several means of payments and issuers also of fundamental type like central bank versus private issuers should be no problem, should be good in such a big market. Then we see the private sector, of course, to continue, remain more innovative. We central banks, let's say, have no ambition to take up the front end, and we don't have the ambition to take over banks' balance sheets by having commercial bank deposits being substituted by central bank digital currency. And the other way forward on the report is there was a public consultation issued, I think, on 12th of October, and that raises a lot of questions to all stakeholders, both citizens and technology firms and official authorities. Everybody's invited to answer to this public consultation. And there can also be free text, answers of any length that we are happy to take. And that will be a major input, of course, for analyzing really what is expected and what are the solutions we should look for. Then we are currently doing experimentation. So for a 6 month period, we do, let's say, micro experimentation. Morten has given just some great examples. Within 6 months, of course, one cannot do so much. On the other side, you have to get your hands dirty to better understand, technology, what can really be done. So we are trying that in a relatively short period of time. Of course, we will continue afterwards as well. And then we do further conceptual work, monetary policy implications, financial stability, interaction with private solutions, and international repercussions and collaboration at an international level. And towards mid-21, the report announces the Eurosystem might decide to go for a project, and a project is something serious in the Eurosystem jargon. It means basically you spend the money to get a minimum viable product. So that would be, something that typically takes more than a year, a few years maybe, and that at the end of this, the ECB would be able to issue digital euro. The decision to go for a project would not be a decision to issue. Yeah, that would be an independent decision. Normally, if you start a project because you spend money, you are sure that you will use it. In this case, the two are not strictly linked because of the lead time of being ready and of the scenarios that can quickly materialize. There's a feeling one may want to spend the money even before a decision to really use it. So let me say a few more words in my last 3 minutes on this issue. Maybe, there are some people who say, where's the business case for a digital euro or CBDC in general, retail CBDC? There are all those great private solutions. Why would households, start being keen on using CBDC if, quasi-perfection has been reached? Ease of payment is very advanced now with private solutions. So some people say, come on, where's the business case? Others would say, oh my God, we will crowd out the private sector. We will be super successful and so on in various, versions. So what what should we fear more, and how do we hit the middle? So, and to start with, a lot of ideas are projected into CBDC. Different people say, we need absolutely anonymous payment to protect privacy. We need offline payments. Of course, we need to allow central bank digital needs to allow instant credit transfers and direct debits. It, of course, needs to be programmable and allow for smart contracts for advanced use cases in industry and commerce. Then it needs to ensure financial inclusion, meaning that potentially the non-banked and maybe even people without mobile phones need to be able to use it. then it should, of course, be as convenient to use as existing private sector solutions. It should include card, mobile, and internet desktop access. So that's a very broad range. I call it here the thickest Swiss army knife we were dreaming of maybe when we were children. Or, do we keep it very narrow and say, maybe we just want a point of sale payment solution similar to banknotes to not, enter all those other things? Question mark, no? Of course, on the one side, if you enter with a new thing like CBDC, you want to get it right and comprehensive. That's a fair approach, yeah. But on the other side, project risk and delivery time also grow exponentially if we take it, as a practical, from a practical perspective, that this is not, something only to write a textbook about, but really to implement. So comprehensiveness, in some sense, also a key parameter for the relative attractiveness of a digital euro relative to private solutions. I would say together with pricing, no? So comprehensiveness and pricing together will determine the competitiveness, the success of a CBDC in retail business. I mean, pricing is a very interesting topic. Now, if you start with the analogy of banknotes, you would say banknotes were free, CBDC should be free. Of course, in the good old days, banknote issuance was anyway highly profitable because of seigniorage. Would have been also the case for CBDC. Today, all this is less clear. And then, of course, compared to banknotes with CBDC, we really enter the habitat of private digital payment solutions much more than with banknotes. So let's say competitiveness issues are more important. And that's, I think, my final slide. This makes a point. I mean, imagine you can map, you can capture attractiveness of a digital euro, a combination of pricing and comprehensiveness and convenience on the x-axis. And on the y-axis, you have the market share that this digital euro will have. Of course, also it's you pack here a lot of things into one dimension. What is market share? Okay, anyway, but then if we develop it, it's clear, the demand curve, and here there are two alternative demand curves, the black, full and dotted lines. The demand curves are upward sloping, but how do they look like? If we want to hit at the end a market share, whatever it means, which is similar maybe to the one that central bank money had in retail payments in the past, we choose a certain attractiveness. But how will this demand curve really look like if it's of the type M2 and, it shifts to the left or the right? We easily end up with, a market share in one or the other extreme. If it's of the type M1, then, getting it wrong is, of course, less dramatic. But I think we have to think here about stabilizers, how the market share somehow in this very uncertain setting and in this network industry, we have to think about how we can get this right in terms of neither crowding out nor being unsuccessful, and maybe build in some parameters. And for the, share in sight deposits, that could be done with tiering of remuneration. But in other fields, it's not so easy. So I stop here. Thank you, Dirk, for giving me the time.
Well, thanks very much, Ulrich. And in the meantime, we got plenty of questions. I'm not sure whether I really kept up with all of them. Many seem to relate to retail CBDC. A couple were also concerned with wholesale. So I suggest that we sort of look briefly at the wholesale and then move to the retail topic. Morten, do you want to comment on two issues that I noted here? How is the token exactly stored in the ledger? How does the change of ownership during delivery take place? There was also a question about the link between FedNow 24/7, I think, and the system that you looked at, if I interpret the question correctly. Do you want to say anything on this, or is this all too much detail for us right now?
I think the first one is too much detail. I replied that there are some annexes in the report that describes how the platform or the SDX platform works. On the other one, I don't think if FedNow is a faster payment system for retail payments that is supposed to come into operation in a a couple of years at least. So I don't think that has anything really too much to do with the wholesale CBDC.
Excellent. So let me try to therefore turn the focus more to the retail CBD side of things. I took note, I hope, of most of the questions that I saw, and then try to include them in the questions to come. Let's first try to take a little bit more of a helicopter perspective. Maybe Ernest got us started before to where he listed how interest in the question has substantially increased over the last couple of years. Nobody talked about it a couple of years ago, and now there's a lot of excitement. But the whole idea is very old, right? I mean, Tobin talked about something like CBDC in the 60s, sort of the extreme version of extreme narrow banking in the Chicago plan dates from the 30s. In the question that came the issue of the Swiss Vollgeld initiative, certainly pushing in a certain direction. Now there's the private sector competition. Libra was mentioned. So what is it, Ulrich and Morten? What do you think has been the main driver in the last couple of years? Is this excitement about technology? Is this unhappiness with what the private sector delivers? Is it sort of what is it? What is the main driver that brings all this fascination in a couple of recent years?
So I would say, digitalization of payments has accelerated tremendously. I mean, we have seen cases like Sweden, talking now on, let's say, on this corner of the world in Europe, where within few years and really the thing switches over to a total predominance and a vanishing of the use of banknotes practically. So I think this accelerated the thing really for Europeans, for the ECB and so on, because there are other countries who move in this direction. I think the UK within 3 years has changed a lot, and even in Europe, on the continent, things are changing. So I think that's really the reason this fear to be totally marginalized with banknotes, because not having followed obvious technological process.
Okay, Morten, would you see that similarly?
Yeah. Yes, I think the BIS does, at least for the last couple of years, have done like a survey of why central banks are actually thinking about CBDCs. And I think there's two couple of things. One is that there's one group of countries that are fearing that cash is disappearing, and so that's why they're looking into retail CBDC. And then there's another group of countries, most developing countries, that have too much cash, and they think that cash is too expensive to operate. So that's why they're interested in an electronic alternative, and they might not have a banking system that actually provides any form of reliable digital. Might not have a banking system and might not have one that provides a reliable form of digital money. And then I think there's China. China so far has been very different from the rest of the world, and I see there's a lot of question around China also in the chat. Yeah. In China, I think it's been driven by the uptake of these big tech payment provisions and services.
Yeah. So I'll try to get back to this international dimension a little bit later when we think about potential timelines and how they are driven by international developments and who is actually in charge of deciding when to implement. So let's try to defer it a little bit, and let's first maybe discuss what the general challenges, opportunities and challenges are of retail CBDC as we envision it currently. Let's start with the problems or the key dangers of retail CBDC. Ulrich, what do you think? I mean, what is it that we should be most afraid of or most concerned of when thinking about retail CBDC?
Yeah, I would say what I mentioned or what comes more and more to my mind when thinking, about a concrete project is the scope of the functionality to get it right and to get it right to neither, let's say, fail because you miss a business case for users, nor to be too successful to crowd out. I mean, and in some areas, I think you can control your over success for the stock of deposits, which may shift to CBDC. I think you can control it, But let's say at the front end, how much will be your market share in POI payments? That's a bit difficult, to say I want to target there a reasonable share. What does it mean? I mean, that's a bit tricky, And then, as a central banker and responsible then for the operations, okay, it's another big responsibility. This system must be running smoothly, You cannot see operational glitches. If everybody relies on that, you have to get it right. And so that's, I think, the challenge, yeah.
Now you have in your report that, as most of us probably have seen in the last couple of months, you have suggested a two-tiered remuneration system to let the central bank manage demand for CBDC, and therefore maybe to moderate some of these dangers that you described. Are you concerned to some extent that such a system with two-tier remuneration could be gamed in some way? Financial history has always shown us that in certain episodes it's difficult to maintain different prices of one of the same financial instrument. Or have central banks enough instruments to make sure that such a gaming of the system could be avoided? How do you see that?
Dirk, I mean, first, I think some sort of tiering is almost unavoidable for monetary areas with negative interest rates, unless you want to forget negative interest rates. We have really trillions of euro invested in government securities at negative rates. An unconstrained access to a zero remunerated digital euro doesn't work, Then this is the end of negative interest rate policy. So I think that's very clear. If at the same time you want your citizens to have some CBDC remunerated non-negatively, then you have to do tiering already. I see no issue at all on gaming this system. I mean, we have this type of tiering arrangements in central banking for a long time. They work. We have, for instance, government deposits with the euro system. They have two tiers, how they are remunerated. We have the same now for bank deposits. You have the same in Switzerland. So I see no problem, neither in theory nor in practice, really.
Good. Morten, what from your perspective are sort of the key dangers, the key risks that we should be concerned with on the retail CBDC side?
So the obvious one that everybody mentioned is kind of like financial stability, whether in times of crisis there can be this rush into a CBDC, and if it's somehow capped, how is that going to change behavior? I think it's a fundamental issue about what the public sector's role should be in the financial system, and I think it depends a lot on whether you want the CBDC or the retail CBDC to be a medium of exchange or like a retail settlement asset. So just something that the private sector kind of like builds on top of, or that is actually going to be its own means of payment. So are we going to have like central bank credit cards or whatever, wallets and mobile phones? So it's really, is the central bank only going to provide like the base layer? So say a set of accounts or tokens, or is it, so how much functionality is the central bank going to provide? If it's very limited, then I think the implications are going to be much more.
Yeah. So let's maybe go a little bit deeper into that argument that you mentioned that everybody has on her mind when thinking about retail CBDC, that there's suddenly a rush of withdrawals from commercial banks over to the central bank, basically. So I have an account at Bank X. I want to withdraw from Bank X, and I want to basically get CBDC in exchange. Suppose Bank X has no more reserves, and basically now there's two options, right? Either the central bank accepts this incoming payment, in which case they're essentially refinancing the commercial bank, or they just say, I don't want to have this incoming payment, and then the bank essentially keeps their deposits, right? These are sort of the two logical, I think, possibilities. Now, if the central bank accepts the incoming payment and therefore becomes a creditor to the commercial bank. I understand central banks are not happy about that. They don't want that to happen too much, too quickly, etc. Why is that exactly? Do the central banks, they don't like the idea of having a very long balance sheet because of all the political risks that would be associated with this? Is it that they are used to having collateral when they lend funds to commercial banks, and in that situation they might not be able to require collateral anymore? Is this the key issue, and that's sort of an uncomfortable world to live in? Or what is the main hesitation of central banks towards thinking about basically refinancing the banking sector if there were this rush of withdrawals and deposits at the central bank? What is your sense?
I mean, there are two alternatives. If you have a long balance sheet, know what to do on the asset side. You can buy assets or give more credit to banks. And for banks, those two alternatives mean if you buy securities as central bank, the banks still have to find another source, of funding, which has to be then issuance of bonds themselves, very expensive. And if the central bank gives credit, okay, then the banks become more credit dependent. I think if really you have this longer balance sheet, you can mix the two probably. I mean, you may want as a central bank to buy risk-free assets. I mean, we are, thanks to COVID, we have, ballooning ballooning government debt that is happily purchasable. So the scarcity problem of government debt is a bit gone, yeah. So I would say that would be one choice for filling then the central bank asset side, and providing more credit to banks also possible, but then the collateral framework becomes more important. You don't want maybe a very high share. The higher your share in funding of banks' liabilities, the more relevant, the collateral framework becomes. And as a central bank, then your setting of haircuts and of eligibility versus non-eligibility becomes an important factor for the attractiveness of different assets for banks, And that maybe you don't like because you get deeper into the credit allocation in the economy.
Morten, any additions from your side?
No, but as long as brilliant people like Ulrich work in the central bank, I have no doubt that they can manage those things.
Okay. You also have no doubt that political influence could be too large for even the most brilliant people and strongest central banker to resist?
But I think to some extent we already crossed the Rubicon in terms of large central bank balance sheet. So it's there must be a decrease in marginal effect or something.
Okay. Coming from the risks to the positive sides, what do you see in terms of the key opportunities, the key benefits that retail CBDC could provide? How do you view that, Ulrich?
Yeah, for me, it's really the maintaining the fallback solution, and not too an unattractive fallback solution for citizens, and that means also some use, of course, in an industry which is dominated by network effects, which tends to high concentration and market power of private players. I think there it's good to have a fallback solution for citizens where also you can take into account maybe the preferences of those citizens which are not necessarily so well taken into account. And in addition, we have in Europe a bit this issue of sovereignty. Of course, the sovereignty issue should also be addressed by European providers, again, being a bit more successful in stabilizing or regaining their market share. But CBDC is another way, of course, because it's controlled by us to limit this overexposure maybe to foreign companies with market power.
Morten?
I agree. I think efficiency, cash is, while it's easy and cheap to produce banknotes, it's an expensive system to operate for the economy as a whole. There might be some improvements in terms of cross-border payments, which is an area where we're lacking, quite frankly, efficiency. And yeah, I think those in addition to the things that Ulrich mentioned.
Okay, so I have a couple of other points here, potential benefits, and also something from the chat. First of all, there was a discussion before on the chat that the international access to retail CBDC, that this might be a major issue that the ECB, I think, has, or that the EC report has highlighted as a potential feature, and how important that could be or could serve various purposes if international users would have access to that. Can you comment a little bit on this, maybe, Ulrich? How important do you see that feature? Is this sort of a public good for the world that the ECB would contribute in that respect?
Yeah, in principle, I mean, that's great if you can use it cross-border, because it allows for international payments. There's this G20 big topic of making cross-border payments cheaper. Ex Libra Diem has made this one of the big propositions to lower cross-border costs. So if CBDC can be used cross-border, that helps, both for remittances of individuals, but also for business applications, business payments. So I think that's fine. Therefore, it's good if it's not restricted. On the other side, of course, international usage allows for huge balance of payment flows, capital flows, which can be worrisome, can lead to, dollarization or euro, whatever, much easier than in current times, and maybe and much faster. So that unfortunately brings me back to the necessity of tiering. If take the example of the euro area, you could allow everyone to access a digital euro, provided it is at an interest rate which doesn't make that a super attractive store of value. So at 0%, no way. At -1%, fine. Then it could be used, for payments, but it could not balloon like crazy, as it would if it would be at 0, of course.
Another potential benefit that was mentioned in the chat is the whole financial inclusion debate, right? How much of that, Morten, do you think could be achieved by issuing a user-friendly retail CBDC? Is this a big deal, even in economies, developed economies, or is this something that wouldn't really concern the typical European user?
I think there might be some benefits, financial inclusion benefits in Europe, but I do think, as you also suggest, that the big financial inclusion benefits would be in more emerging economies or developing economies, and there potentially, if done right, these things could have a material impact. So, but there's a lot of things that needs to be done right. I think there's a lot of failed attempts to provide financial inclusion. So it's probably not as easy as many people think it is.
Then there's the whole issue of too big to fail, right? I mean, if sufficiently many people would hold money basically with the ECB or the SNB or some other central bank, there would be a much smaller run problem or run risk for commercial banks, right? If deposits had moved away from banks, even if that causes potentially funding problems for those banks. So is this a major plus? Could that lead to a much more modest bank regulation as a consequence? You would have different banks pursuing different bank business models, but less regulated banks, or is this dreaming?
No, it's not dreaming. I mean, currently you can also have investment, firms which don't rely on deposits. So in the extreme case, of course, if banks would no longer issue deposits, then, this definition of a bank would no longer exist, and the world would continue to exist. No, I mean, currently banks benefit from combining in their business model this collection of sight deposits in normal times at low rates. In today's time, in Europe at least at not so low rates. But that part of the business model of banks you would take away. It would lead to an adjustment, of course, of somehow the costs at which banks can provide credit. So it leads to some adjustment of the financial system, but in theory that is not that is thinkable. No, I would say it would be a huge transition.
Yeah.
And but that's not unthinkable. Yeah.
Morten, any additional thoughts?
I think this quote that says, banks might disappear, but banking will not. So, you will still, banks do something on lending that nobody else seems to be able, not yet at least, to be able to replicate at scale. Their funding model might change, but I still think on their lending side of business, they're still doing a job that, even though big techs are trying to get into that, they still have a comparative advantage there.
Then there's a last potential benefit that I wrote down here on my notes, which concerns the whole issue of credibility. I understand that some of the central banks that think about issuing retail CBDC, they worry that in a world with nearly no cash and no CBDC, there might be there's certainly a loss of connection between the general public and the central bank, since there's no medium issued by the central bank that people actually use. And that as a consequence of this, there might be a loss of credibility, of trust in the central bank money if there's nothing tangible and nothing at all that connects the two sides. So is this a serious concern, or is this simply, we cannot imagine that situation right now, so we might think it's a problem, but probably people will learn to live with such a situation anyway?
Yeah, that's a difficult question, Dirk. I don't know how to answer. I think in theory it should be fine. No, the link then between central bank money and the rest of the world is still in the accounts of the central bank, where banks need central bank money or have central bank money.
Yeah.
But maybe the way you described it, the credibility, that's very philosophical, difficult question. I have no good answer.
Morten, I'm sure you have the answer, no?
I have nothing to add. It's an interesting question, but I'm definitely no expert in that area.
Okay, so let me move a little bit more to the concrete stuff, to the implementation kind of questions. So one thing there is about privacy that I would like to raise. I mean, we had some questions on the comments about how concerned are we or should we be about private sector initiatives like Libra when it comes to consumer protection and in particular privacy issues. But of course, we have similar issues when it comes to retail CBDC, depending on the exact format that such a retail CBDC would take. Now, so therefore, one question concerning implementation issues to me seems we have a spectrum of possible implementation forms for such a CBDC. Some provide more privacy protection, some others protect less. What do you think is the likely trade-off perceived by central banks? Where do they, in the end, want to locate? More on the privacy-friendly side or more on the privacy non-friendly side? Because there's all these other considerations, know your customer, anti-money laundering, etc., etc. So what are the trade-offs here and the cost-benefit perceptions by central banks when it comes to privacy?
Yeah, Dirk, I wouldn't describe it in the way you did the trade-off. Because you can, I think that's not the problem. You can put any parameter, you can find a technical solution to then, put the right parameter, what would be the threshold, from which on a single transaction or accumulation of transfer orders would have to be reported to a central authority, while otherwise through cryptographics, it would the data would not be centralized. So I think it's all possible. Everything is possible. We can choose the parameters which comply with the legal requirements and leave the rest to privacy. I see maybe a bit more the trade-off also of the technical, requirements of total privacy. I mean, even the most sophisticated privacy solution with cryptographics. Ensuring that there's no central authority who can track, who can know who did the transfer. You could still, of course, in a digital world, hack the mobile phone and still, copy the data. So I think you never can 100% achieve the same as for banknotes. And you can, with, effort, achieve something relatively secure, or you can give a less emphasis on this, and it simplifies a bit technical solution. And in any case, if you need tiering and identification, of course, of holders, that also creates a trade-off, no? Because at least you need to know what the stock is, and yeah, it becomes more tricky. If I can give an example that at the end privacy in practice people may not care so much. I don't know if it's a good example, but in Germany, they had this Geldkartenfunktion, which was added to the Giro card, and it was deployed. I think tens of millions of those Giro cards received this Geldkartenfunktion, which allows, in principle, for anonymous payments because you preload the money, gets very close to cash payments. But it was not sufficiently used, and now all the banks have decided to phase that out again. So how big is the demand really in practice? There are some people who have extremely strong feelings on privacy, and one thing we can tell them is we will continue to offer banknotes, and we will do everything to keep them usable for those transactions where you really want, to be anonymous, or for those people who value this so highly. And if we are successful in this on banknotes to keep them usable, maybe we can be a bit more relaxed on privacy for CBDC.
Well, of course, it's in particular in the euro area, there's several countries where it's not possible to use cash really once you get to interesting transactions, right? Like 1,500 euros or something like this. So as of now, the legal tender or the cash is not really useful that much anymore for many transactions.
But if it's for legal reasons, then it should apply to CBDC anyway.
As well.
So that should be transferred to CBDC one-to-one.
Yeah. Morten, another issue that came up in the chat right now is the question of operational complexity once we consider implementation here. We have these days commercial banks taking care of all the work, so to speak, when it comes to payments, know your customer, and anti-money laundering, etc. Now central banks would have to engage in all of this. Isn't this a total waste, a doubling of effort? And maybe a same related question, are central banks able to do it on a more or less efficient level?
Well, I think it's a big question I don't know whether they will be able to do it on an efficient level, but the easiest way to issue a central bank digital currency would just be for the central bank to buy a commercial bank. All of a sudden, all the accounts would be central bank liabilities, right, and you would have all the AML, CFT staff on hand, and then you could run it. That's probably not the right solution. I think even though the private sector has not always covered itself in glory in terms of AML and those issues, I don't think it's a core competence of central banks. So I think that's why I think at some level you definitely would need some public-private partnership. Again, I think if the central banks do a CBDC, it would need to be a very minimalistic layer upon which the private sector builds applications and ways to engage with that. Again, I don't think that's the central bank's core competency. But maybe the central bank should provide a cash-like digital medium of exchange. That's my thinking.
Ulrich, I see you nodding. Another question that was raised on the chat before concerned programmability. If I read this correctly, the Bank of China says programmability is not compatible with CBDC. I'm not sure whether I read this correctly. Any comments on that issue? How do you view programmability? Is that a core feature of CBDC? Probably not a core feature, right? But is it something that we should aspire to, or nice to have?
Yeah, that's the Swiss Army knife, no? That
Yeah.
you want to deploy something and then it should, have all sorts of functionality that are maybe hardly available yet by the private sector itself. So, yeah, I think you can always put on somewhere an add-on with whatever this means and programmability. You can, have a vehicle that is backed with central bank money one-to-one. This vehicle can be private or public, and then, whatever the fantasies are, how this vehicle, what this issues, how this is a programmable token, is possible in principle. So I wouldn't exclude it, but it's not, as Morten has just been saying, maybe the minimum value proposition is something that is a bit, cash-like, and cash is not programmable. But then, okay, I think with programmable stuff we come closer also to ideas relating to wholesale CBDC, as Morten has presented them. Kind of 24 hours, somehow DLT-based applications, tokens. And that, I would say, the fantasy is unlimited, of course. And a priori, I would say central banks should not reject this, but it's not, the first thing coming to our mind when we talk about replacing banknotes by something, because banknotes are no longer used so much.
I have 3 more broader topics for the remaining 20 minutes that I would like to discuss with you. One concerns the whole timing issue. And the governance question. The other one is the questions related to cash, and then a set of questions regarding international dimension. What are different countries doing? So let's start with the timing issue. So there's 2 or 3 sub-questions, so to speak. One concerns probably the ECB, since we have you, Ulrich, right? I mean, you mentioned before that you will decide, or the ECB will decide about the project next summer. This doesn't mean anything about an eventual launch decision. So one question here is, what in your view would it take for the ECB to start the project? So what are the key arguments that would have to be satisfied or checked such that the ECB says, yeah, let's go for the project? And then the next step, what are the key issues that would have to be satisfied for the ECB then to say, let's do it? And there, my question is also, who should actually make that step? Is it really the ECB who should decide about that? Or is this then a decision by, say, the European Parliament or whoever? Who is in charge of such a decision, given that, as we have said before, retail BTC has the potential to fundamentally change our monetary system, right? We go beyond the turf of the central bank to some extent. So who should be in charge? And what are the considerations that you think will guide the ECB's decision? You've talked a bit about that, but maybe give us another perspective on that.
Yeah, I mean, on the project, you trade off what it costs against having this, insurance to be able to issue CBDC at some stage. And the one input is obviously the public consultation now. The EU institutions are very positive generally. Is our sense. The report was presented by Fabio Panetta in the European Parliament, and there are dialogues with the Commission, with the member states, and I would say the feelings are very positive. Overall, very positive on that side. So, but okay, the public consultation is about getting a lot of more input also from citizens and firms and ideas, and the council will, on that basis, decide, I would say, also reflecting further on the side effects, which there's some conceptual work going on. And again, and then on your other question, who really decides then to issue? Would the ECB, just do it? I mean, there's, I think, a legal dimension to this, a purely legal one, and then one beyond the strict legal responsibilities. So on a legal perspective, there's currently, discussion between ECB and Commission, and to get, a common legal understanding. which article in the treaty, would be the basis, what is needed there. Do we need some further legislation or not? So that's just being discussed and will be concluded in one way or the other. But then I think anyway, regardless of the legal setting, the ECB would unlikely, to issue a digital euro if it's not somehow popular, and popular both in the sense that the EU institutions are supportive to it, and the citizens seem to overall be supportive to it. There would be some usage, etc. So it's not in a vacuum that the central bank would decide that. But as mentioned, the impression is the EU institutions are very positive. Maybe as a central banker, one sees more, also the risks and the side effects and the big project and whatever. But on the political side, there's a lot of support. Yeah.
Morten, from your perspective, that when you look at all kinds of central banks the world over, do you feel that central banks are in the driver's seat, or have sort of parliaments taken on some role already in that process? How do you see the relative?
So I would have so I think it's hard to envision a central bank issuing a retail CBDC without strong engagement and also support from the government. And also, I just think you can look at the Riksbank, the e-kroner project. The central bank did a couple of studies, but now they also have engaged with the parliament in terms of more deep thinking of what the governments, and the government being the central bank and the rest of the government, what their role should be in the digital payments market. So I think that's just a natural progression that also has been suggested by the ECB, that the central bank does a lot of thinking, and then once it's ready, then it engages with the wider public.
Yeah. Okay, so the next set of issues here I would bundle under the topic of cash and consequences of more or less cash use. Maybe also the public perceptions. So there's one line of macroeconomists who get very excited about the notion that cash could disappear, and then once we have CBDC, we could really get started doing useful stuff in their perception, and maybe frightening stuff from the perspective of other people. But I understand that you both were careful to stress that the CBDC does not mean the abolishment of cash, of course. But these are two totally independent questions, and I agree they are. But then on the other hand, I mean, there's a certain worry that once you have this very nice retail CBDC out there, people will use it, and demand for cash might cede, and also the public support for cash might cede, and eventually, with the public support shrinking, there's no point anymore in maintaining cash, and we might eventually, nevertheless, get in a situation where we, end up in this world where CBDC is this new powerful instrument that some people are afraid of. How do you view that? Is there a serious concern? Is this only a very long-run phenomenon to be worried about? There was also a question on the chat about, do you know what the public perceptions are on CBDC? Are there any results, empirical results on how the public thinks about that option? Is it something they are eager, or are they more afraid about potentially the loss of cash that might be associated with that? What are your views in that domain?
I mean, we are gathering now input from via this public consultation. Okay, the representativeness of those who provide their input is of course not guaranteed, but those are people who have feelings about the topic at least. Others on the street, you may ask them, what do you think on CBDC? They may just not care what it is. So at least those people who respond are maybe the informed and interested ones, and we will see what they will say. I mean, on this topic, does it allow for overcoming the zero lower bound at the end, because it's one contribution to making cash disappear over time? I mean, the long run, if in 20 years indeed nobody, remembers what cash is, and then also the governing council of the ECB doesn't remember that in 2020 Christine Lagarde promised that we would continue issuing cash, okay, then I cannot speak for this future, what will happen. and maybe then it's fine. And then if the macroeconomists in 2040 still believe that going to -4% avoids all sorts of other non-conventional measures with more side effects, let them do it now in 2040. But for the foreseeable future, I think the commitment of central banks to continue issuing cash is very credible. And therefore, I see the zero lower bound not being affected. The only way to affect it would be in the other direction. If you don't have tiering or negative remuneration of a tier 2, then you make the effective lower bound the zero lower bound and not where it is now, which is a bit below now. So that is a more relevant immediate point.
Yeah. Morten, I see a comment here on the chat related to that by Wim Boonstra. Cash is the ultimate backup if all other systems fail. I think that's probably true. Morten?
Yeah, I think that's true, but it's not a very flexible instrument. It's like maybe it would be better if we all had like some checks under our mattress that we could pull out and use that to pay in such a situation. But in terms of cash, right? If you invented cash today, you wouldn't be allowed to bring it to the market because there's all kinds of issues with it. And I generally just think whatever question you want to ask about payments, cash cannot be the answer. So it's like cash is going to disappear at some point. So I think it's a generational issue. My son just moved last year, spent a year in Denmark. He went from Switzerland, where he was used to using cash, to paying everything with his phone. So it's like, and so the next generation are probably never going to be using cash. They're going to be paying everything with their phone. You're right. There might be an issue when electricity disappears. We will have to figure that out, the backup. But it's just the longer term. I don't think cash has a future. But how long is the long run? That's always a question.
But to some extent, this is also a function of what central banks are doing, right? I understand that in some Nordic countries, the reduction of cash use is related to the fact that central banks a couple of years ago were actually pushing in that direction and sort of trying to make the banks pay for cash handling, etc., what other countries didn't do to the same extent. Maybe there's some regrets now, I'm not sure, but so it's not totally sort of out of control, say, beyond policymakers' hands, right?
No, but of course, then you have to subsidize it. That's true. And that's what at least the Nordic central banks for a while didn't want to do anymore.
Exactly.
And that's of course why.
Good.
It's good that banks respond to incentives, right?
And it's always, as economists, we're happy to hear that, right? For a change.
Yeah.
There was the last topic maybe I'd like to touch upon concerns the international dimension. We already talked about the ECB potentially being open to making retail CBDC open to everybody in a sense. But then there was talk in the chat, and also you mentioned before, in China. China is one of these big players that has been moving forward, and there's potentially considerations beyond monetary policy or payments that make policymakers go in that direction or not. There's strategic, international, foreign policy considerations, all these kind of issues. Also today, I think probably was today, I think that Russia has again said that they want to go in that direction. On the chat, somebody asked about Estonia. I have to. Was Estonia sort of, or the experience in Estonia, now I don't find it anymore, was this sort of interest or relevant for considerations by the ECB? So my question here is to you, to what extent should we think about this as a domestic monetary policy question, payments question, or to what extent should we think about the CBDC considerations as considerations that are much above the head of central bankers or monetary economists, and it's really about international policy, who is going first, and these kind of issues?
I think the main issue is first not relating to international topics. It's really domestic payments. But then, okay, we have the G20 agenda, of lowering cross-border payment costs. And there, CBDC is also one building block now, which plays a role. So that requires international use again. And fine, of course, there are international payments, and we thought we were living in a global economy, which was getting more and more global. And maybe this trend is resuming. So cross-border payments are indeed important, and CBDC can be used for it. But I don't see it so much of a matter of geopolitical war or conflicts. Or I think central banks are willing to collaborate on this. I mean, they see that an uncontrolled global competition between CBDC is not a good idea. So central banks are willing to sit together and to think, what are the rules of cross-border usage to ensure that this contributes to the stability and the efficiency of the international monetary system, and not the contrary. I see central banks here in a collaboration mode, but politicians somehow, have more, this thinking that this is part of a global, geopolitical competition, let's say. But I don't like to see it this way.
Morten, what is your view on that? How do you see the discussions in that direction?
So it's hard for me to disagree with Ulrich coming from the Bank for International Settlements. That's kind of like our bread and butter to facilitate the central bank cooperation. I just want to think. I think the economics of it, the benefits, the efficiencies are just so big that even though I take the point that there are political economy issues and they are important, I just think the underlying economic drivers at some point are going to make sure that there's going to be some kind of cross-border elements and collaboration or interoperability of different CBDC. I know that we used to have a government-sponsored payment system that actually worked really well across borders. Right. And very efficiently. So that was the postal gyro system, at least in Europe. So you could actually fairly inexpensively send money from Sweden to Japan using the backbone of the postal system. And so we can bring that back again.
So what makes me a bit wonder though in that respect, and that's the background maybe for my question, is when I look at the US, which were not at the forefront of the CBDC discussion so far, my sense is that the interests that are voiced by Senate, for example, by Senate members in favor of CBDC are, number one, we could have done this $600 check thing much easier with CBDC, and number two, China is doing it, so we have to move quickly, right? These seem to be the main considerations there, as that's at least the way I view them. Of course, that's not what the Fed says, but what senators are saying. But anyway, I probably forgot quite a few questions, and there were many on the chat. There was one about SWIFT just a second before. Do we talk about the end of? I read it as, do we talk about the end of SWIFT if we have CBDC in place? Yeah, let me put it like this. Any views on that?
Yeah, that's the general question, of crowding out the private sector with a universal and hyper successful CBDC use everywhere. But I would say I hope the answer is no, as much as the answer is that banks should not disappear. I think it's good to have a healthy, balance between the public sector and the private sector. The private sector, can deliver a lot of things better than we can. So let's keep them in the business.
Morten, what do you think? When will the ECB issue retail CBDC?
I obviously have no idea. So.
Yeah, we don't either, but you have a view, I'm sure.
I think that's going to happen within our lifetime.
Okay, well, you're still very young, right? That doesn't help us much.
No, I'm not.
Okay. Ulrich, do you want to venture a guess as well, or do you prefer to keep silent on that one?
Yeah, I would say I would be more precise. I would say before retirement, Morten.
Okay, yeah.
Okay, so that sounds like a clear yes. It's just a matter of time, if I get that right from two of you. Thank you very, very much to Morten and Ulrich. I think you did just great. I mean, this was a lot of stuff, and you had excellent views, I think, and responses to all of these questions. And so from my side, thank you very much. And I think Ernest will conclude this session.
Thank you, Dirk.
Thank you, Dirk.
This concludes our CBDC lecture. I think the event showed impressively that CBDC is a topic of prime interest for both experts and the public at large. I think the event showed that there are many aspects which are easily understandable, but there are also very technical details. Let me warmly thank Dirk, Ulrich, and Morten for sharing your time and your expertise with all of us. Thank you to all participants for raising so many relevant and interesting points. Bye-bye. Thank you.
Bye-bye. Thank you.
Bye.
Thanks, Ernest. Bye.
Bye-bye.